Level up your success with the ICABA World Network, where accomplished Black professionals and entrepreneurs have created a thriving global ecosystem built from valuable connections and impactful collaborations. Be a part of a trusted network that uplifts, inspires, and enhances your success. Join like-minded and leading Black professionals to foster meaningful relationships, unlock opportunities, and access the resources you need to thrive in your career, business, and life. Go to ICABAWorldNetwork.com and join today.
What has happened? I have come across many clients who were not fundable for various reasons. And this is how we began the process of learning how to help a business become fundable, acquire capital, expand, and do what they need to do to be successful, which I've done for myself and several clients, which is how I met Chris, who you'll be speaking to later through ICABA. So I want to start by addressing a couple of things. I'm going to use this time to focus primarily on what does a good business credit profile look like? Like, how do I, as a business owner, prepare my business to get funded? What are banks looking for? Am I there? Some of you could be there already and not know it, and some of you may just be a few steps away. So I'm going to use this time I have to be as succinct as possible, give you the best information that I can. So the first thing I recommend is one, and I'm pretty confident I don't need to say this, but just to be sure, a sole proprietorship does not qualify. So we're talking about an LLC or a corporation, C Corp, S Corp. These are the business entities we're speaking of. So if you're not already there, then you need to get that, which means going on Sunbiz or whatever state you're in, applying for that, getting an EIN number, and then we can get started. While I'm saying that, another thing I want to say is business owners aren't always on top of their tax returns. But if you're going to ask a bank for funding, they're going to want to see your returns. They're going to want to look at what you're grossing, what you're netting. They want to see all of that. So please find a good accountant. Just make sure all of that is in order. So let's get back to like just the very beginning. So the first thing I did for my clients, besides establishing their business, is just making sure that they're registered with all the business credit bureaus. And you want to make sure that it's showing exactly as it does. I'm going to say Sunbiz because we're in Florida, exactly as it does on Sunbiz. So you want to go to like NAV, you want to go to Duns & Bradstreet, Equifax, Experian. You want to make sure that your business is there and that you start applying to companies that report there. So if you don't already have business credit, the first tier is you want to start applying to like net 30 accounts, right? Those are very easy to get. And this way it starts to report. You want to get like 5 to 8 of these positive reportings before you go to the next tier, right? The next tier would be business credit cards. Once you get that, you want to show good reporting there. And there are several business credit cards that we could talk about that's just easier to get than others. And then you want to start applying for some of those. And you want to be in a position where you know you'll get approved, right? You start applying for those business credit cards, you show good reporting there, then we could get to someone like a bank where you could get access to capital, you could get business lines of credit. What we do is before you even get to that point, within 30 to 180 days, you already have up to $75,000 in capital for your business. And you're going to be applying in your business name. One of the requirements for that is a business bank account. So again, this probably goes without saying, but for your business to be creditworthy, it needs to have its own business bank account. Another question we get often is, do I need my personal credit score to be good to get business credit? My answer to that, from my experience, is it's always good to have personal credit score. Banks, especially since COVID, are now doing what we call a 360 approach. So while there are businesses that will just go by your business name, the type of funding and capital a business needs, at least the type of business I work with are looking for, you want to make sure your personal credit is also a representation of you, because that's the name that is applying for your business. That's the name that the business is standing behind. So I would love to tell you that no, that doesn't matter. In smaller cases, sure, you might be able to get away with it in some cases, but you really want lines of credit, you want business loans, you want something meaningful that can move the needle for your business, that can help you use that capital to hire more staff, use that capital to expand your business, use that capital. Maybe you have a wholesale, you need to buy stuff in advance to then sell it as a revolving credit. These are things that you want to be prepared for. So I would start again by reiterating, establishing that your business is established as an actual business with an EIN number, making sure all your paperwork is in order, your operations agreement, your EIN number is there, your tax returns there. You want to make sure all of those things are ready. Have a good accountant on your side, because some of them will also ask for a profit and loss statement. They'll also ask for interim reports. They'll ask for different things. And these are things that we guide you in that process to have. There are simpler loans, credit cards, that you can get in your business name only, that I also recommend, because a bank that's going to fund you, they're going to look at your highest limit, right? They're not going to give you $100,000 if you've ever only had a loan up to $5,000 or $10,000. And what I recommend for that is, if you're not starting, if you're already somewhere where you're at $50,000, $80,000, $100,000, $500,000, fine. But if you're not and you're looking for a way to get there, my advice would be to apply for a business card with your bank, apply for a business card with Amex, apply for a business card with MasterCard, and then wherever they start you, you can start by doing good history with them. So let's say they start you at $20,000. You can then go, okay, I'm going to use this $20,000. I'm going to pay it back. I'm going to use it. I'm going to pay it back. Then I want you to call your service provider. I want you to say, hi, I would like for you to raise my limit, right? After a certain period of good history, they will raise your limit. And then once they raise your limit, that will begin to set the standard of another tier of funding that you can qualify for. These are the questions I get the most. It's about the personal credit, about having an LLC, whether a sole proprietorship can work. I also get like what does it entail really? And what I could say for you is, our program is I'm oversimplifying it because it is very tedious, and you have to be very disciplined and judicial in making sure that you build each step. We do it for you. We do 90% of the work, but it entails the first tier, which is you get those 5 to 8 net 30 accounts. And the second tier will tell you where to apply for cards. These are all cards and credit services that report to your business credit. Your business credit has its own reporting, just like your personal credit. And a bank is going to check that. They're going to check to see how your business is reporting. Does it have lending? Is it an entity by itself that is paying things back? Because the goal of any lender is, one, to make money and interest, but two, to know that you can pay it back. So what we're doing is preparing that business as a person, as its own identity, to show to a lender, yes, I am fundable. And this is what improves your quality to be funded by A banks and A lenders, is to just be as prepared as possible. Another thing you might be asking, well, if my personal credit's not great, how do I get that great? We don't do personal credit, but we have several people that we can recommend that have done a good job for clients. And then we'll give you all of the numbers, and you could see who you want to work well with. I've seen good results in like 60 days, 90 days, depending on what's on your credit. And those two together is really what's gonna get you the most capital to grow your business. What else can I share with you? Another thing we do is we ensure that the relationships with our lenders, we share those with you. So you're not speaking to an 800 number, you're not speaking to some chat thing, you'll be speaking to you'll be speaking with a personal relationship with a reputable lender. We don't work with predatory lenders. We don't work with micro loans. We don't do that because, again, we want our clients to be successful, and they are set up to be successful. So they don't need to go the route of taking a loan from an entity that's just gonna be predatory. So once you're prepared, once your business is really prepared, you don't need to go that route. You can walk into almost any entity and they're going to be excited that you're there. They're going to say, wow, this is exactly the type of client we're looking for. And that's how you're going to get funded. What are some of the questions how long does it take? We get that question a lot. How long will it take me to build business credit if I've never started? And our process takes from 30 days to 180 days. So it depends on where you are and how diligent you are with what we share with you. But in 90 days, we have clients that are seeing results, that are having funding that their business can use. In 180 days, you're A, paper ready. You can go to someone like PNC and start a relationship, and they'll be very happy to have you because you'll have everything together, which is also great for your business. So what I've learned is getting your business ready for funding also gets your business ready for growth because you discover things that you need that you didn't even realize that you needed. What are some other questions that I get that may be helpful for you guys? If you have multiple business, you can do the same with each. A bank is not gonna look and say, oh, you only have one business that is set up to be funded. Or you have three. They're not gonna be like that. They're gonna be like, wow, tell me more about this business. And that just solidifies the relationship you have with that lender. You want also to set up a great relationship with whoever you choose to be with, and you can have multiple sources of funding, which I recommend. I would just be mindful because each lender is going to see that. They're going to look at your business credit profile and they're going to see how much funding you have, how much debt you have, how you're paying that, how you're not paying that. A huge advantage to business credit, and this is one of my favorites, this helped me a lot in growing my business, is that your business credit does not show on your personal credit unless you default, right? If you're not in default, that's a great way to grow your business without it dragging down your personal score. You never want to run your business from personal credit. I don't recommend that. You don't want to go get a MasterCard in your personal name and run that up, operating your business when there's a better option. I'd much rather you get a business credit card, use that to run your business. Keep your personal for your personal, your business for your business. They really will serve each other better in that way. I think those are the things that have been most beneficial for me and my clients. And again, I'm really oversimplifying. It really is a process. It's not a difficult process. It's just a recipe. Once you know the recipe, you can make the cake, right? So at the end of this, we'll have a Q&A, and if you have any questions for me to dig deeper, I'm happy to do it. If you have any questions about different types of cards to start with, I'm happy to do it. I do want to say this also. When setting up your business profile, there's certain things they look for. So it's not setting it up your way. Okay, I have a business, I'm registered with Sunbiz. Also, your business presence. When they go to see your business, is it a real business? Is it operating? Do you have a website? Do you have a legitimate phone number that's to your business line? Are you listed anywhere? Are you on Google Business? Are you on Facebook Business? What is even down to your voicemail? What is your voicemail like? Do you have a business presence? They are going to look for that. A business email. It'd be very helpful if you have an email with your name at zenithinvestmentgroup.com. These are all things that really set you apart and show that you're serious about your business and that your business has its separate identity from your personal. I can also share some resources to help with building websites, getting your business listed, getting a company logo. Hopefully everyone here has that, but if not, it's important. It's one thing to You could be doing business as a sole proprietorship, but it doesn't mean that you are a business. So you want to do business as a business. And so you want to set up everything for that business. So when they look at it, it stands on its own. Um, I think that's pretty much the big questions that I get. How long does it take? About your personal credit score? What does a business credit profile look like? Some of the places where that reports that would be Experian, Equifax, Duns and Bradstreet. These are places you want to be registered with. And these are things that improves your ability to be funded as a business. None of it is difficult. None of it is rocket science. There are so many small businesses that can qualify for capital. And I really take a lot of joy and a lot of pride in helping businesses do that, because that's the only way I scaled. That's the only way a lot of business owners I know scale. And another important thing, it's also how you speak to the lender. Like, they speak a language. So your business may very well qualify a loan, but if you're not speaking their language, they will never understand that. And they could disqualify you because they can't see it. So it's important to have someone that can translate what your business practices are, what you do, so that they understand it and can see, how does this fit with us? Is this within our protocol? And while they may be looking in a box like this, if you can tailor your business to show how it fits within that profile and it makes sense, and they can see your business operating in that way, is very helpful. Because when you are your business, you are so close to it sometimes, it's very difficult to see, oh, wow, we do that, right? So in explaining that and having a personal relationship with a banker, having someone like myself who can translate what you do, it makes a huge difference in whether you get approved or denied, in how you explain that business. I have clients that have been denied, and when I look at their business, their profile, I'm like, but what about this part of your business? Did you talk about this? And they'll say no, because they just didn't think about it. And that makes a huge difference. So I would encourage you, whatever stage you're at, when you're speaking to someone like myself or like Chris, that you really just talk about what your business does and help us. That will help us shape the best way to articulate what you do to a lender. Each lender has different things that they look for, and your business often fits that. You just don't know how to articulate it to them. So there is a specific language that they speak, and it's very helpful to make that transition when you're communicating that. So yeah, basically this is about just how to structure your business to be more fundable, to get lines of credit, multiple lines of credit, to have a trusted relationship with the bank, a personal relationship with the bank. Um, I think, I mean, long gone are the days where I just call a random number. It's so much better to call someone. They're like, hey, Daima, they take your call and they go, okay, let me check this out for you. Or they'll give you suggestions. What about this? What about that? Now you find other things that help your business. One of the things that were extremely beneficial for me with my relationship with PNC is their Pinnacle platform, which that was just an extra bonus from just talking about what my business does. And there's a lot of benefit for that. So if there's anything I can do to help you, even just to look at your business, to discover what's there, what's missing, how to strengthen it for fundability, I'm happy to do it. In conjunction with ICABA, there's always special consideration. This organization has helped me tremendously. And I look forward to helping any of you that I can. I will share some of these resources with Hutch as well, that he could share with you in the future. So with that, I'm going to pass it off to Chris. And then if you have any questions for me at the end, I'll be happy to answer it.
Hey, Diana, before we go off to Chris, I wanted to amplify a couple of things that you said that I think that were just really very important. And one of them was, you mentioned to them about knowing their business and being able to articulate their business when they're talking with someone.
Yeah.
And one of the things that we probably don't do a lot of times is really put together our story. What is our story about our business? And
Yeah.
and whenever you have a chance to talk with somebody about it, you start thinking about all the things that you do, and so it becomes kind of a just a recitation. Well, we do this, we do that, this, and so on and so forth. However, when you're particularly talking to someone that you're trying to either get to do business with you or to loan you money, you really have to kind of paint a picture for them so that they can know more than just the various pieces, but how it all fits together. What's the value proposition? Why people want to do business with you? And so people want to give some real thought to that. And so that when those opportunities come, that they're prepared. And the thing you have to keep in mind is they may come when you're not looking for it. You know, you
Yeah.
might meet a banker at an event and you may have an opportunity to talk to them. And if you wait until that opportunity comes to try to put your story together, you probably won't get the story together really well. So I wanted to, and I can tell your response. I'll let you, if you want to add to what I just said there.
I do. I want to give an example. And before that, I want to say too, if you are able to get a loan, line of credit, any of that, but you don't need it, get it. Because it's always when you need it that you don't qualify. This is what I experience with my clients. When they need it is when they've already been late on so many bills. They've already been behind on so many things that they thought they wouldn't be behind on. And now they're like, I need a loan. I need a loan. Now your credit's bad. Now you're defaulted on some business loans. Who's going to lend to you? That's going to be very difficult. So if you're in a position where you don't yet need it, your credit's good, you're paying get it. Put it, make sure you have it so that when you need it, it's already there. That's my advice. I want to give an example of the story. So I have celebrity clients. And I'm not saying that by any means to be braggadocious. I'm saying that because, and if there are any celebrities on here, you can verify this. We're all have issues with being prepared, but they are the most unprepared clients I have, right? And so I have someone in entertainment that went to get a loan and got denied. So I spoke to them, and they're a very known, very successful person. And I spoke to them and I said, well, banks don't understand entertainment. If you're not at a specific bank that deals with entertainment, you're gonna get denied. But when we spoke about what they do in entertainment, because it's such a huge industry, there's so many niche things in entertainment. What he does is he buys publishing when they're low. He'll buy someone's masters, their royalties, buy it when they're low, keep it, and then when he's ready, he sells it. And I'm like, well, that sounds like wholesale to me, right? So we went to a bank who doesn't do entertainment. We explained that portion of his business and he got approved. So it's really, the bank can understand if you're buying something at a lower price to then sell it at retail, right? Whether they may not understand entertainment, but they understand that. And that's what he was doing and very successful at it. So that's an example of the story and how you speak their language. So yeah, thanks for saying that, Hutch. Hopefully that resonates with some of you, because it really is important.
Well, let me
Um,
just finish that off, because you just said something that was, again, really important. And there's about, when you talked about how he's buying basically low and selling high when
yeah,
there's some value created and above what he paid for, the masters or the content. But when you put it in the perspective of as a wholesaler, you know, now the bank has a concept. Oh, we know what wholesaling is. And
right,
so being
right,
able to understand how your business relates to bankers, because bankers have to constantly try to figure out a lot of different businesses.
yeah,
And the better you are at being able to tell your story in the language what the banker understands, the more you're helping yourself do that. And I just want to give an example. Any of you guys have ever read anything about Mandela's time when he was in prison at Robbins Island? That one of the things that he did was he learned how to speak the language of the Afrikaners, and the Afrikaners were the white prisoner guards at the prison that basically were guarding all the prisoners. And people would say, "Well, why would you want to learn to speak their language?" Well, by learning to speak their language, it allowed him an ability to create a relationship with them And when you speak to somebody in their native language or their adopted language, but in the language in which that they communicate, if you've ever been to a foreign country and a person starts speaking to you in their native language and you respond back to them, you can almost immediately see if they know that you're a tourist or from out, that they realize, wow, you speak in my language, and you immediately have an affinity. That same dynamic, okay, would happen if you can talk to a banker and begin to use some banking terms. You don't have to be a banker, and you don't have to use all bankers speak, but if you can talk about your balance sheet, if you can talk about your loan capacity and what the applications of funds are going to be, those
Yes.
are signals to the banker that, hey, you understand a little bit about this process and you're
Yeah.
not the average ordinary person. And it's going to really add to your credibility.
Yes. And that gives me one more thing. I'm coming, Chris.
Take
So
your
you
time.
also want to know if you're going, are you trying to get a loan? Are you trying to get a line of credit? What are you trying to get? Because there are different, what's the word I want to use? There are different products the bank has for different functions of your business. So I wouldn't recommend going to a bank and saying, hey, I need a line of credit to buy equipment. You're gonna get denied because they're gonna say, no, we don't do lines of credit for equipment, but we'll give you a term loan for an equipment. So it helps to know what you're going for and what matches. You cannot go to a bank and say, hey, I would like to get a line of credit so I could go invest in real estate. You're going to be denied. They're going to say, we have other products to help with real estate. Do you need are you getting a primary house? You want to, they're not going to give you a line of credit for real estate. So the thing is to know what you're applying for, what you will qualify for, and what your business needs are. Once those are aligned with the correct product, it increases your chances of being funded, because the bank is also, they want success and they want to give you the right product for success. The person working with you wants a successful working relationship. So they're also not going to go to their boss and go, hey, I messed up. I just gave this person a line of credit for, a machine, right? It's not going to happen. So it's really helpful to know, what does your business need? What is the product that the bank has that matches that? And let's ask for that, because you might get denied for a line of credit and think you're not fundable, but you go to the same bank and ask for a term loan and you're going to get approved. And this speaks to, and this is where I'm going to hand it off to you, Chris, because this speaks to relationships. If you do this cold at a bank without someone like me or like Chris, you're going to get denied. No one is going to call you back and go, hey, we saw that you applied for a line of credit for some equipment, but did you know we have a term loan? That's not going to happen. You're going to get denied. That's going to be the end of it. If you speak to someone like myself or like Chris, and you say that to us, we're going to be like, you're going to get denied. Would you be interested in a term loan? And this is how that works. And, or if you need a line of credit, tell me more about your business. Let's see if there's a function, if you actually need, if that's what you need, instead of doing it that way. And then your chances of approval just skyrocketed. So relationships are critical. It's a whole nother world. It's not as simple as just applying cold. You can and just cross your fingers and hope you get it. But with the right relationships, your road to success and approval increases exponentially. And with that, I'm going to pass it off to one of my relationships with an incredible bank, but because I have an incredible banker, with Chris Major.
Hey, Chris, as we pass off to you, I want to segue to you with two things. One of the entrepreneur creeds is borrow in good times to hold it for bad times.
Yes.
So, yeah, because what you have to understand, banks are in the business of loaning money to make money. We sometimes forget that banking is a business. Okay. And so banks, when the economy goes bad, their underwriters, the regulators, they start looking at their loans and how they're performing, and they tighten up on their loan requirements. They tighten up on capital that you may need to have in reserve, what you may need to capitalize a loan or collateralize a loan. So the point being is that one of the worst things that you can do is wait until you really need money to try to borrow it. You know, the best time to build your relationship with a banker is when you don't need the money, and you can really bring them on board in terms of building that relationship where they can also become an advisor to you, where everything that you just heard from Daima, instead of when you only need the money that you talk to the banker, take the banker to lunch and say, hey, listen, you know, I don't really need any money right now, but I'm looking to grow. And hopefully a year from now, I may need to borrow some money from you. But before then, I'd like to build a relationship with you. Also, I'd like to share with you what's going on with my business, what my plans are. And maybe you can also help to give me some advice as to things that I might want to do, that if I do need to borrow some money later on, I'll be better prepared. I got to tell you, generally, I think most bankers will see you as somebody that they're going to want to build a relationship with, so that when you are ready, that they will be there to help supply the need that you have. And with that segue, I will now introduce and bring to the stage, as they may say, Mr. Christopher Major, who is the Vice President of Relationship Manager. He's a Vice President and Relationship Manager for Minority Business Development at PNC Bank. So, Chris, it is all yours, sir.
Outstanding, outstanding. Thank you so much. With what Daima shared, I was just about to say ditto, because she just covered about a whole lot of what you need to know. I hope everybody took notes. I really do, because what was shared is really important. And sometimes that's not what's discussed and talked about, you know, because we hear certain terms and conditions and otherwise, but the nooks and crannies of what you do, that's why you're here. That's why we're part of ICABA. You know, you want to be in an environment where you can actually learn what's taking place. So with that said, you know, Jerome gave me some advice, and I said, you know what, it's really important that each of you really get to connect and understand from your perspective what you need to do in order to be successful at getting access to capital, scaling your business, and just understanding how that works. Okay, so I'm going to start off with what not to do. Okay, and the places not to go, and the things to avoid at all costs if you can, because I've seen the consequence and the damage it's done, and it's very hard to recover from. Okay, I'm going to say the term predatory lender, but before I do that, Jerome also highlighted, you know, to speak the language, to understand who you're talking to, who you're making that emotional connection, and really making sure that they understand you, but you need to understand them, because in essence, they're holding the handle in this regard. I'm saying they, meaning the bank, right? The financial institution that you're trying to convince to lend you the money. So a little bit about me, just so you understand. I was born in Jamaica. I grew up in New York City, right? The reason I share that is just context of, I came to Florida. Mom made it a priority that I had to graduate because I was a first generation graduate. So I graduated with a degree in finance and international business, as you saw, but more importantly, I graduated with bad credit. I share that story often enough because the financially astute individual you see before you today was not always this way. There was a time I couldn't even get a cell phone. I couldn't, if it wasn't for my now wife, it wouldn't have happened, right? Because I had knowledge. I was smart enough to graduate college, right? But didn't understand the system. And so Jerome talked about knowing and understanding how it works. And so I compare it to a game. I think we've all been somewhat familiar to Monopoly. Okay, that's a game that's been out for a long time. The rules are already there, right? So you can't go to the Monopoly game with the chess playbook. You're not going to be successful. Even worse, go with checkers playbook, right? You have to know the game and understand Monopoly for what it is. And the financial services system, or the financial system here in the Western Hemisphere, is really established, and credit is an active part of that. Now, like myself as an immigrant, not where you're coming from, may not have these things. And many of you who you may already know, but may not know. And once you're here, it's important that you embrace what is in front of you. And it's not that hard to find out. That's why when Daima talked about relationships, it is so important. You don't need to be a subject matter expert. What you need is to find a good partner and find someone that you can talk to kind of educate you on the things that you yourself may not be aware of, but will save you a lot of heartache by trying to figure it out all out on your own. Hence why you're here at the ICABA meeting, hence why you've taken a proactive approach that many others have not. So I wanted to share something with you about things that we may not be as familiar with. One, when Daima talked about building your personal credit and making sure that that's available so that you can ensure that when you go for business credit, they coincide. They're one and the same. You would have to be a multinational or multi-million dollar corporate entity where you've already established the business for an extended period of time. And sometimes it's said that, oh, I can put it in my business name. Yeah, but that's still always going to look towards you being the personal guarantor. The reason why I share that is that your business is its entity, but you are the entity that are sponsoring and supporting that business. There's a thing called a NAICS code, the NAICS code. All right. What does that code do and what does it mean? It is the most important code that you can possibly position when you go to the bank for your loan. Because if you happen to be a restaurant, that's not a preferred industry. But let's say you're a food truck. That's not considered a restaurant. And if you have the appropriate NAICS code, you're not designated in a segment that might hold you back, because the bank, whenever we're looking to assess giving loans, we also look at the industry that you're in. We look at your financials, we look at your background, we look at the credit history, we look at a number of things. The bank is very, very good at assessing risk, because as Jerome said it best, it's all about getting that money back. What we love more than lending is being paid back. And when you don't always think about this, you think about a $100,000 loss. Do you know how many loans we have to do to make up for $100,000? So I'm giving that to you to give you context and perspective of how you want to make sure that you're thinking and positioning yourself with a relationship so that you'll know who you're talking to and what you're looking to accomplish. Daima said something that's also super important, and both of them gave you tremendous nuggets. I want to talk about this year, which is an election year. Banks operate under pendulums of one extreme to another. During an election year, things are going to be tight because nobody knows what the economy and what those rules and regulations and policy and procedure and everything may look like after this year's election. It's a heated election. There's a lot going on. I'm not speaking into politics. I'm just telling you that's just reality. But this is why you want to try and qualify and get what you can while you can, even though you may not necessarily need it. Having or being able to have what you don't need versus to need what you can't have, it's a much better dynamic for you to be able to start planning and preparing in advance. Think about those things in advance. And so let me go ahead and go back to what I started by telling you, things to avoid. Predatory lenders, they make it easy, they make it convenient, they make it very, very attractive, because it's, oh, I don't need to do this. You don't have to go through all the stuff you have to go through with the bank. The bank asks for all this paperwork, and other financial institutions are always asking for all this paperwork and so forth. But guess what? They're going to charge you an exorbitant amount of interest, and they probably won't tell you the interest up front. They'll probably say, oh, you only need to do 0.5% of sales. Well, I'm going to give an example of a client I work with, had a Shopify relationship and 0.5% of sales. Well, 0.5% of sales every day on 365 days, half of that is about 150, right? 150-something% interest. Okay. Oh, it sounds like nothing, right? And she was like, yeah, it sounds so cheap. I signed it. And she's from Dominican Republic, right? And again, very successful business, but basically signed into a partnership that had no idea that that's the type of exorbitant interest that would be charged, and didn't have a partnership, didn't have a banker, didn't have that relationship to be able to talk through some of the things that actually can work, right? Because it wasn't really, there was a credit issue, it was an awareness issue. And going after things like Daima had shared, everyone comes in and first thing you want, I need a line of credit, need a line of credit, need a line of credit. Now, a line of credit is the riskiest and most difficult of loan products to achieve, because that, when you think about the line of credit, you're able to use the line, pay it off, use it again. So you're given a tremendous amount of trust from the bank versus a structured term loan where you have a fixed payment, a fixed amount, and a fixed time frame that you're going to pay this back. And we can take automatic payments and so forth. So it's an easier thing to accomplish. And many don't really stop and think about that. But the type of loan you're trying to, or type of borrowing you're trying to do when you go to the bank for your business does make a difference. So those are things that I would definitely emphasize and pay attention to. Now, again, Banks have their underwriting criteria. Commercial banks are the most stringent in their underwriting criteria because the bigger the bank, the larger the scale of what they're doing. But you, again, learn and understand those expectations. And really what it comes down to, your business has to demonstrate its ability to pay back its debt. So the term cash flow, I would get very, very comfortable with how do you cash flow. That's one of the terms, by speaking the language, that the banker is going to want to know, how do you cash flow? So having a strong relationship with your accountant, knowing whether you're profitable or not, because it's not going to be you telling them, say, yeah, I'm profitable. Oh, I just made this much money last year. Well, you have to be able to document that and document that through your tax returns. And then you also want to demonstrate what your balances are in your account relationship and so forth to see what you have to be able to comfortably pay the debt back. So some of you are saying, well, if I had all that money, why would I be borrowing? Well, I want to give you other context and perspective. What you're looking to accomplish in this instance is incremental increases in your ability to build credit. I didn't use the term Dun & Bradstreet initially for a specific reason, because that is one of the things that I think many miss out in building credit in the business name. Dun & Bradstreet reports on your credit worthiness, just like Equifax, Experian, and TransUnion, which you may or may not have heard, but that's on the personal side. They also have a business credit report, okay? And Dima talked about getting the easy access credit cards, getting those store cards that are much easier to accomplish and get. Once you do that, you're building business credit. And by building business credit, it's complementing your personal credit. And then in addition to making sure that you're keeping good records of the income that you're making, because I've had individuals I've worked and coached where, you know, they made $300,000-$400,000, but on paper, it looks more like $3,000-$4,000 because they didn't want to pay Uncle Sam. Remember, a bank is a federally regulated industry. We can't give you money on what you say you made or what you claim to have made. You have to be able to demonstrate that with your tax returns and things of that nature. Okay, so that's what I wanted to make sure that I share with you. What we're able to do, you know, in addition to kind of giving you ideas on what you would get with a credit card, which is the easiest of the credit access to credit or access to capital components. I think you should be very, very versed in the business credit cards and the ones that you would see best for you, because that's where you start your journey. You build on top of that and trying to get small loans, building your credit worthiness, getting things in place. And when the time comes and you find yourself not being able to be credit worthy, I also have access to what many may not know, but they're called CDFIs. These are community development financial institutions. So because of my minority development business title, I cover the state of Florida. And what I'm able to do through the program that PNC has allowed me to do is being able to say, if you don't meet the criteria at PNC Bank, because we are a national bank now, and we have our underwriting criteria established, and it's got to be fair and equitable for all involved. But there are instances where some may not qualify based on our current criteria, especially during an election year and other things being much more stringent, harder to qualify. These CDFIs are local entities that are usually subsidized. They're subsidized in the sense that they're not going to be a part of that predatory lender micro space. What they're there to do is to help business owners like yourself, not with lines of credit. They have loans to help you scale your business, give you that capital injection that sometimes is necessary. You're on year 2, year 3 of your business, and boy, if you could buy this piece of equipment, or if you could, you know, get this money to buy more product or buy more of something, it would really give you the difference of what you need, because sometimes you don't get paid back with things that you already have pending, okay, on your payables. So those are options that you have readily available to you. And what I wanted to highlight more than anything else is the concept of relationship just comes down to a conversation. It's not a one size fits all. It's really about having some dialogue so you'll know what to do. Avoid predatory lenders. I have many horror stories that I can continue to tell you about because again, you're stuck. And then when your credit is ruined, you got to start all over again. And it really makes it difficult to build yourself from a situation like that. So I'd start off by saying avoid predatory lenders. Shopify, PayPal, others, not bad-mouthing the company because they have other alternatives, but they do have channels that can really go exorbitant. And then a lot of local companies that make it really easy for you, but they do that for a reason. If it sounds too good to be true, follow your instincts, right? Or at least follow the advice of a banker and making you know that that's not the right way to go, because it's very painful to try and get yourself out of that type of situation. So with that dynamic, I feel that it's important that you all get the chance to ask some questions and really connect with what's important to you. And don't be afraid to share and ask, whatever comes to mind, because I think it's going to be best that we tailor it to you, because there's so much knowledge and so much that we love to provide, but I think it's going to have more meaning when you're able to say, hey, here's my situation, or here, what about this? Or what I've heard about that. I've heard about these things. How can we ensure that we give you the information you need to be successful in your individual journey? So with that, I'd like to transfer back over to Jerome, Mr. Hutch himself, and seeing how we can go ahead and facilitate getting some questions going.
Hey, Chris.
Okay.
Yes, sir.
Yeah, well, I was going to say, for anyone, if you want to ask a question, just unmute, yourself and raise your hand using your reactions, and then we'll, based on your question or who you want to answer, we'll get it to them.
I am trying to unmute. I'm not quite sure if it's unmuted.
You're unmuted.
We can hear you.
Excellent. Good afternoon, Chris. Good afternoon, everyone. All right. So let me tell you a little bit about myself. My business is a charter company business. I've been in business for 10 years. We do events. It's an event space. Weddings, bar mitzvahs, anniversaries, whatever, birthday parties. It's 2 dinner cruise vessels. They're very large. South Beach Lady and South Florida Princess are the names. The South Beach Lady holds about 350 people. South Florida Princess holds about 130 people. Currently, we are renting space across the street from, the Margaritaville. It's docket space. It's extremely expensive. My question is, I'm looking for land, and I think I might have, docket space. I think I might have found something. The question that I have is, most of the banks will not lend money for land space, docket space specifically, because I'm with the Federal Credit Union and they won't lend money for that. Any recommendations as far as how to get money?
Land only, undeveloped land. Yeah, that's not usually as attractive because it can stay empty for a long time. So the risk factor is, when the land is undeveloped and there's no criteria to ensure that you build on that property for whatever the case may be, it's not as easy to get, but it's not impossible. So there are some options that I could possibly introduce you to. No guarantees, but those those community development financial institutions, I can assess what those options are. So based on your business, what is it that you're specifically looking to borrow that land for?
Dock space.
For dock space?
Yeah,
Okay, and this is waterfront property?
absolutely.
Okay. So that dock space is for sale. So what I would share with you is I would definitely like to entertain a conversation, because it would kind of go into me asking you some more detailed questions, but there may be some options that I could make available to you, and it's worth a discussion, but you're absolutely right. You're not going to find any easy option in getting that available, because undeveloped land, even commercial real estate in some of the most prized locations, unless you're putting a property on it, it becomes very risky. And especially, as many don't realize, election year, they're watching their balance sheet. They're looking to say, yeah, am I willing to take risks today? Now, let me see what happens at the end of this year to see how things play out, see what the economy looks like and things like that. So the short answer is, let me give you my contact information. I'd love to talk to you about.
All right.
It's chris.major that you see here at pnc.com.
1 second. Okay.
chris.major@pnc.com. and business is 954
954
471
471
7717.
7717. All right.
That is correct.
Appreciate you. Thank you.
Absolutely, absolutely. Great question, by the way, because that's real.
Okay. So if there's anyone who also wants to put a question in the chat in case you're kind of, a little shy, don't want to speak, but the floor is open for questions. I did want to ask Chris if, Chris, how helpful is it when you're talking to a entrepreneur who wants to borrow money from the bank and you're trying to assess their business? Is there any value in that business owner being able to really discuss their financial statements with you versus what I think you may experience, fairly often is that someone says, yeah, here's my financial statements. I got them from my CPA or my accountant. But I can't really tell you. I can tell you about the business, but I can't tell you that much about my financial statements. Is that something that you experience, I don't know, I would say on a regular basis, or is that maybe an exceptional where most people come and they can break down their financial statements and tell you all about them? What's more than the norm?
Well, I would say our community has a greater opportunity to be able to break that dynamic and understand their financials and knowing your business and knowing your story. I think you said that very well initially, and it's not common, right? So we could definitely benefit from, and I'm not saying to be a subject matter expert. I'm not an accountant, okay? But I know what a balance sheet is. I know what a profit and loss statement is. I know what I did gross annual revenues. I mean, there have been instances where we base your business on your gross annual revenues into what segment. It's not saying if you're not making enough money or making too much, but there are different products and services. There are different things that you tend to need. The bigger your business, the larger your business gets, the more sales involved. So knowing these things, I think it's paramount. And there's no getting around it, because you are going to be the one that tells the best story about your business and what you're doing, because part of that process and part of what they do in the underwriting, they want to know your story. They want to understand what got you started in the business. What are some of your hurdles? What are some of the successes? What are some of the things you have going on as a whole? So the same way you probably speak to that a little easier, you got to know your financials, because you got to quantify and monetize that part of the conversation.
Yeah, and I don't want to make it sound too complicated or intimidating for folks, but as an example,
food in my mouth, they'll call me. There's more chicken.
Okay, whoever that's talking about the chicken, please mute yourself. So
save some for me.
Yeah, because if you're not giving us any, we don't want to hear about it.
No, right, that's it.
There's more.
But as you're looking at your financial statements, I think that what I've learned over the years, when you know what your gross margin is, meaning the difference between how much you make based upon what you sell and the revenue that you generate from selling it. And then knowing what your operating profit is and understanding the difference between the two. That may to some people seem to be very fundamental, basic. But my experience has also told me that there are many people who are not always as knowledgeable about those basic fundamentals of their business. And those are the kind of things that I think can make a difference in terms of that business owner presenting themselves in a way, because part of you making a decision to whether to loan someone some money is going to be based on quantitative and qualitative factors. And if you feel confident that if the person's, say, quantitative factors are just maybe borderline and maybe even just a little bit under the line, but man, you really believe this person understands their business, they've got a vision, they're growing it, that you just know that, all they need is just a little extra help, that can make the difference sometimes in getting them over the hump. And so just wanted to throw that out for you to also comment on a little bit, Chris.
I'd love to comment on that. And so you're absolutely right. So it doesn't have to be complicated. And here's the simplest part of this whole process. You paid a tax advisor, a CPA, an accountant that I hope you paid someone that knows how to describe that for you and help you articulate it, because you're giving them your financial information. Ask them those questions. Kind of get to be comfortable once you get your tax return.
No,
Not
hold
to
on.
assess.
Time out, Chris. Please,
Sure.
ladies and gentlemen, I know Zoom is not new. If you're not talking, and particularly if you're having conversations with somebody else, just mute yourself. And please be respectful of our speakers and the other hosts in attendance. Thank you. Chris, back to you.
Understood. Yeah, so you're paying a financial professional to, an accounting professional for that matter, that you should be able to have those discussions, because not just how much money do you owe at the end of the year, right? You really want to be able to get that type of interaction because you're paying for a service. I would recommend that's who you talk to and gets the fundamentals, balance sheet, profit and loss, margins, and understand it's in banking, that's called the cash flow conversation, right? So we kind of know, how does the money go in your account? How does the money come out? How do you make money? And what are the expenses that you have? So we're not getting like overly complicated, maybe use terms that can be intimidating. So don't be intimidated by your own business. You're the one that needs to know that better than anybody else. It's almost like your medical records. You couldn't expect anybody else to know that. So yes, right on with you, Hutch. That's definitely something we could all use some time to get caught up on, especially knowing this is tax season. This would be as good a time as any to use that time to get caught up and know what's going on with your business, so you can tell that story with confidence, passion, and conviction, because it does make a difference. And obviously with a bank partner or a partner that can help you with that journey.
Great. Ricardo Molina has a question.
Thanks. Thank you both. Great information. Appreciate it. I have a curious question because I've had different experiences in terms of getting loans and lines of credit for businesses. What are really the top criteria that the bank uses to assess a business? Is it the net income? Is it cash flow? Is it year-to-year growth? And the reason I asked is because obviously as business owners, we operate our business so at the end of the year, we get the biggest gain, meaning that if you're gonna end the year with certain kind of profit, business owners sometimes rather invest that money in capital and all those things like that. So your net income at the end of the year ends up being low. But if the business has been healthy throughout the years, I've had mixed situations in the past with a rich cash flow business and gradual, 25% growth year over year. But the net income, I think, impacted me just because of the way I run it. I just want to get your take on that.
Yeah, so that is where you kind of have a little bit of a catch-22. But if it's a healthy business and cash flow, if you have a strong CPA, strong accountant, that would ultimately position you to where you can maximize your tax benefits by, going into your amortization, going into things that you can comfortably put in and that you can write off. But if you go to the bank and we look at your tax return, we can add that back and give you credit for that income. So there's things that you have to be mindful of. Not disclosing something in terms of the revenue you make is not helpful to anyone but you, probably for the immediate piece where you're saying, well, I'm not going to disclose this. But there are ways to be able to use that cash flow that you're bringing in and not have to pay taxes on it because you reinvest into the company. I'll give you a large example. Amazon, for example, right? Can you get bigger than Amazon? Why don't they pay taxes?
Yeah, well, that's my point.
Because now that's complex taxes. That's on another level, but the principles are the same.
Okay.
You have the same laws and the same rules that apply to you. So the goal is to get someone that knows and understands how that can relate, because each business is a little unique and different. It's not a one size fits all, but it demonstrates to you that if you really want to get the most out of your business, you can be in that type of situation. And so, for example, PNC happens to have a product that we do on stated income up to 100,000 with a line, 100,000 for a line of credit. So if you're doing $1 million or more in gross revenues, We typically give you a range of saying about 10% is what we think you would be able to qualify for. So if you're doing $1 million in revenue, 10% is 100,000. Then that's a strong credit driven process. So you'd have to have impeccable credit. But in essence, it shows that if you're looking to get something in particular, there are ways that you can do it by just showing that, hey, I'm making $1 million in gross revenue without going into the details of your net income. Does that make sense?
Yes, yes. Can I add one more thing?
Sure.
And since you're obviously always looking at the, I don't know what happened to my video here. Because I know you look deeply at your personal finances and credit.
Yes, absolutely. 100% of the time.
If the person who's soliciting the loan also has a sizable savings or a way to access cash, does that play a big role also in getting a business line of credit?
Well, depending on what's on the personal credit, okay? Foreclosures, bankruptcy, and charge-offs are tough. The benefit that I have with access to capital is that I have come across a lot of clients that have some credit dings for one reason or another. But as long as they can demonstrate that the business is profitable, like their tax returns can demonstrate that the business can support the debt they're looking to take on, they can service the debt, we call it debt service. We do have our community development financial institutions that we partner with that are more apt to look into those things to see what we can do to get that capital for you. But personal credit for all banks is going to be a primary focus because that's the guarantor. And for the lion's share of who we're going to be talking to and who we interact with, the size businesses we represent, your personal credit is going to be a mandate. Mm-hmm. And so the key to it, I think technology has helped us tremendously. We can look at our personal credit score. If you even have a credit card at any one of the major banks, you can look at your credit. You're allowed to look once a year, Equifax, Experian, TransUnion, and see what's causing it, see what's there. I'm just sharing not to you specifically, but for everyone listening, be proactive. Look into what the banks are seeing. You know, it's not something the banks are putting together. This is something that you have with your history and learn how you can position that. And that's something Daima specializes in. She'll be able to take you from ground zero up till where you are and talk it through because, again, it's not a one size fits all. It's an individualized journey. I like to think of it as your fingerprint. And that is your credit journey. That's your fingerprint. So you kind of learn what that looks like and say, how do we position you to be in the best place possible in 6 to 12 months? And that's real. That's basically where you'll get that benefit.
Great. Thanks so much. Appreciate it.
Very welcome. Thank you for the question, by the way. Appreciate it.
Thank you.
I'm having a hard time hearing what's being said.
Same.
Can you hear me now? Is that better?
Yes, significantly
Okay,
better. Thank you.
I apologize. My mic was down. Okay, real quick. I work with a lot of nonprofits. Nonprofits are always crying they need money. They want to try to get funds through grants and stuff. None of them want to come to a bank. None of them want to try to build relationships. None of them want to build partnerships. Can you give any advice that I can go back to my nonprofit people to let them know, hey, look, I got a guy, or I know a lady or a guy that they can talk with at least to get their act together so that they're not necessarily depending on other people to help them get whatever they need for their organization.
100%. Okay, you touched on a sensitive topic, right?
Okay,
so,
thank you.
I'm putting the transparency on full blast, but I'm being respectful of the audience, okay, and what you're referring to. So a startup business and a nonprofit are probably going to be your two most difficult ones to get credit for.
Okay.
For the simple fact that startup, there's no revenue, there's nothing to demonstrate what the business has done. So it's strictly on their personal credit. And that just exposes the most risk. But then you have a nonprofit. When you're a nonprofit, when it comes to the lending, it's basically on the entity. This is actually an example where there's no guarantor because of how the business is structured. It's a nonprofit corporation. And based on the members, you would have to have a relationship with a bank because they're going to want to see at least 5 years. Where normally in small business, 2 to 3 years is where they start looking at to see how long you've been in business before they start to entertain lending. 5 years on a nonprofit. I'm just speaking in general, and that's for the majority of the cases. You have exceptions here and there. But if a nonprofit wants to be successful at their nonprofit, they need to go to a bank that helps and supports nonprofits. And you would have to start the journey somewhere. What I tend to have happen, just like you, they're like, oh, that's going to take too long. That's too much work. Let me go get it here and get it there and get it there. And then 2 years have passed, 3 years have passed, 4 years have passed, 5 years have passed. And they screech by the whole time. Whereas if they started one place, just like a marathon, it's 26 miles. But the first step gets you that much closer to completion. So the relationship that they build with a banker, with a bank, will be exponentially better and more beneficial, because the bank not only has credit to look off of, but how do they operate their accounts? Most banks have an internal score that they grade their client relationships based on performance of their accounts and other things. Okay, so for a nonprofit, that's paramount. That's what's going to be needed for them to do it if they want to be successful. And the larger the nonprofit, or the smaller the nonprofit, the more they need to be thinking along those lines. Even large nonprofits have to be with the bank for an extended period of time, and make sure that they've, are with a bank that's going to be nonprofit friendly, and saying, hey, here's our criteria here, and get all that stuff up front before you just go opening an account just because it's on the closest corner to you. That's what I see happen. They said, I'm going to stick with this bank because I can walk across the street to get there.
No.
What does that mean?
Yeah. Okay. Thank you, Chris.
Great question. Great question.
No, thank you. I look forward to building my relationship with you. And you too, Miss Lindo. I see you over there hanging out real quietly. I got you. All right.
I like it.
Chris, I have a question. My name is Cynthia Alexander. And my question actually is to both of you all. Is it best to get an investor or get capital from a bank?
So I'm going to take that on two fronts. I would take the word best out of it, right?
Okay.
I would tell you the circumstance as to what I look at, okay? You have to know who that investor is, okay? If it's family or friends or otherwise, that has the personal dynamic to it. So you always know that sometimes friends and family and money don't always mix. But depending on who that investor is, and how you're going about doing it, if this is an investor that's going to be a partner in your business, because it's a kind of broad question, so I want to kind of express it so that it's understood in the direction I'm coming from. An investor in its true sense, in terms of someone that wants to invest in your business, like you have the knowledge, the know-how, the wherewithal, but don't have the capital, and they have the capital but don't have any, so your silent partner perspective, those can be some pretty good partnerships. But what I strongly recommend is that is done with a lawyer, with a really strong working agreement on how that business is structured and how the assets are to be allocated and how the money is to be paid back if profitable and so forth. Now, that's if you have what you call a silent investor, okay, or someone that you're looking to invest in your business or things of that nature, okay? The next piece is, it's always best to try and build a relationship with your bank, because eventually, even with that investor, you're going to need more access to capital. If the business is successful, you're going to want to start that relationship regardless. And looking to borrow those funds, it's probably in your best interest to go ahead and get yourself set up so that your business is capable of getting that credit. Any business that you're going to start you want it to have strong business credit. At any point in time that you can build that and continue to grow that relationship and have credit, even if you don't need it, it's going to come a time, what Hutch talked about it. It's better to have it and not need it than to need it and can't have it. Because when you do need it is when you're not going to qualify. Daima said that, and that couldn't be more true, because normally everyone comes to the bank in a panic. Anybody walking into the bank and asking for loans, 99% of them get declined because it's a need. We tend to be able to prospect with being able to get those that don't have an immediate need, but are in a business and can see the value, and we can position statements like this to say, all right, let's start putting you in a position where you can have it available so that when the need arises, you're already qualified because you already put yourself in that situation.
Well, I don't have the credit problem, and I have more credit than I actually need in personal credit. And the business is doing great. I just had this investor come and want to invest in my company. I've been in business 15 years now, though.
Okay, fantastic.
And it's a solid person. I always check people out and this kind of stuff. And so, but I want to start a call center. And that's what I was wondering. I mean, I could use, I don't want to use my money. I could. I want to use other people's money.
So if I can answer that, then
Go for it,
my
Jamie.
experience as an entrepreneur and a business owner, I've several times have investors approach me. I just had a meeting a couple of weeks ago. Not saying I won't in the future, but in each instance, I've opted not to. And each situation is unique, but I'll tell you why I opted not to. For me, if I can get the capital with the bank, right, and the interest rate is reasonable to do what I need to do, I'd rather that than take the risk with a personality that I don't know. Because the reason you draft agreements with partners is not because of how it starts, it's because of how it could end, right? So you want to protect yourself about how it could end. So if I can avoid that, I will. Now, if I cannot get funding from a bank or a lender that I trust and I need the money, then I would take that route. Another reason I would take that route as an entrepreneur is if they were bringing more than capital.
Yes,
If
and they
were
are.
bringing experience and resources and making it just so much easier for me and for the business to grow, then that's something I would consider. I personally would not want, if I have a business that's been established for 15 years, I wouldn't be comfortable in a successful business. I would not be comfortable now having an investor / partner in that business. I would prefer to do a joint venture or a special purpose corp or create some other entity with that investor for the purpose of whatever the business you're conducting.
Okay, I really like that part because they're bringing a lot to the table for the growth factor because I do insurance and notary and bonding and all that kind of stuff, right? And but they bring a lot to the table as into the people they bring to the table. And I mean, I could get the money, but I don't want to have to pay it back. So I like the joint venture part.
Yeah. If you're not already in a call center business, I would just create, and please get advice from a lawyer, but this is just from
Well, yeah, I already got somebody from Hutch that I'm
Yes.
actually talking to.
But as an entrepreneur, speaking to an entrepreneur, I would create a separate entity for that we could do
Okay.
together. So you can still have your business do what it do without any involvement, because they're not investing in your insurance business, correct?
No, actually, it's the notary part of it and the training and just we have so much things that we can do, and he's bringing things that we don't have.
Right.
So I like the joint venture part. So I think I will check into that more than anything.
Okay.
And but thank you all very much.
Yeah, you're welcome.
And this is great.
Yeah, no, Diamond nailed. I'm sorry.
What I was just saying was, yeah, I think Dee definitely nailed it for sure. And I'm going to put it really simply for you. We all know that before Apple came out with the iPhone, phones were just considered to be phones. Okay, they had pretty much one utility, making phone calls. And then Apple came out with the iPhone, and all of a sudden they became smart. And we talk about them as smartphones because they have the capability of doing so many more things than just making a phone call. Well, in the business of investing and investor relations and seeking capital and capital seeking, entrepreneurs to invest in, there's a term that's called smart money, okay, versus dumb money. Dumb money is when you're just getting an investor. That's all they bring to the table is money. Smart money is when that investor brings something to the table that really enhances the business beyond just bringing you the money. And you've already said that you're basically looking at a smart money situation because it's not just about the money, but it's also about the resources, the connections, and the other things that the investor is bringing to the table. So the second piece of it then is, how do you structure it? And Diamond was very, astute in saying that you've already got 15 years of experience, your business is doing well. So before you bring the investor on, as I know that you're already doing, talk to a lawyer and structure it in a way where you can access the capital, access the smart investor for the resources, knowledge, expertise, and whatever else they bring to the table, but do it in a way that makes sure that you maintain control of your business, because you don't need to change those things at this point. And it can work. When it comes to whether you would do it from terms of borrowing the money or doing it from an investor, it really is depending upon also what your preference is. You may be at a point right now where you don't really want to take on additional capital, but you would like to grow, and if somebody's willing to put the money up and you can structure it properly, that may be an ideal situation for you. If you're
Okay, that's what I want.
Yeah, and so that kind of answers that question for you.
Yes.
Daima, anybody have any additional questions for Chris or Daima?
Can you put their contact information in the chat,
Yes.
please?
Yeah, I'm glad you reminded me. I know you've already sent that once. So guys, Chris and Daima, please put your contact info in the chat where folks can follow up with you. And as they're doing this, I want to also tell you that coming up in the not too distant future, we're also going to have a session and talking about investor relations and how to pitch your business for people who you're looking for to invest versus debt financing, which is mostly what we talked about today. And there's a lot of other options out there. There's factoring, there's SBA loans, and we could kind of go into a myriad of different financial instruments and vehicles by which for you to get the access to the capital that you're looking for. But this is definitely the most traditional, most conventional, is going to the bank. And even more fundamental to that is how to get ready to build a relationship with your bank in order to have a successful banking relationship. You need to take that time, as we talked about, and having these introductions and discussions and getting to know each other before you need the money. And they can be very helpful to you, and that can be a really positive relationship. And when it comes time for you to need the money, it's much easier for you to figure everything out with somebody who has already now gotten to know you and you've developed a rapport with, than if you're going in cold, as Daima mentioned earlier in her conversation. Well, ladies and gentlemen, it looks like we have probably answered most of the questions that you have, and we thank you for your time today. And so please, we'll see you at our next session on Thursday. We're going to be talking about marketing. And so for those of you who are looking to grow your business, which is just about everybody, marketing is a key component of that. And so we have 4 dynamite speakers: Andre Cave, Socially Buzz; Abdul Muhammad from MDM Ventures; Grant McCall, Follow the Brand; and also Teresa Chambers from 10th Muse Enterprises. We'll be talking about LinkedIn optimization, where LinkedIn now has become a very significant marketing tool for in the social media space, and how best to use that. Thought leadership in today's world, being recognized as a thought leader can be very impactful for your brand, and how you're able to monetize your brand and create growth in your business from revenues. And then looking at strategic marketing, digital marketing, and social, and all those various ways that now that we can now go beyond the traditional form of advertising and really hone in specifically on specific targets that we're going after. So we're going to cover a lot of bases on Thursday, and we'll look forward to seeing you then. And Chris and Daima, I'm going to give you guys the last word. And so ladies first, and Chris, you'll be able to take us home. Daima, you have any last words?
Yes, thank you for having me. I really enjoyed sharing with every one of you. Hopefully there's some information there that was super helpful for you, and you can reach me anytime. You could always, my information is there. If you need anything else about me, you can ask Hutch and we can always set something up, but I had a blast. Thank you for your questions. Chris, it was great seeing you again and being on here with you. You have great information as always. Thank you for this opportunity, Hutch, and I just wish you guys all a great week.
And I encourage you to connect with Daima on ICABA. And so you can go to the marketplace and just type in her name. You can, if you remember Daima, if you remember Lindo, and you'll be able to find her. And then you'll also next week be able to find Chris. So we are now going to have Chris to close us out. Mr. Major.
All right. Well, listen, chivalry's not dead, and I know that Diamond should definitely go first because she's definitely first in many things that she does, and I appreciate her partnership. I also appreciate the opportunity here on the ICABA platform to have these candid discussions that I think are so much needed. There's so much fluff in so many other instances, and when you think about relationships, I really appreciate Hutch for creating this environment and putting us in a position where we can network and speak to one another and connect with one another and do what a lot other communities do. We got to think about our community and how we can really make a difference and start making those changes so that we can start to thrive and prosper, not just thrive, but really take it to the new heights of what we're capable of, because exponential is our potential, and that's what I want to leave us with.
Spoken like a true New Yorker.
I love that.
Boogie down Bronx, y'all. Boogie back.
Exponential is our potential.
I did four of the five. I did 4 of the 5. Staten Island.
Exponential is our potential. Come on.
Like that.
Good stuff.
Drop the mic. It's
Hey, the chat has been saved.
Well, you guys are perfect. We started on time and we're closing it on time. So we started at 6 o'clock and we're closing at 7:30. Good job, people. All right.
Thank you.
All right.
Hey, have a nice evening,
Enjoy the
everyone.
rest of your evening.
Bye, everybody.
Have a good one, everyone. Bye now.
Level up your success with the ICABA World Network, where accomplished Black professionals and entrepreneurs have created a thriving global ecosystem built from valuable connections and impactful collaborations. Be a part of a trusted network that uplifts, inspires, and enhances your success. Join like-minded and leading Black professionals to foster meaningful relationships, unlock opportunities, and access the resources you need to thrive in your career, business, and life. Go to ICABAWorldNetwork.com and join today.